I think so. Yeah, he was just in a meeting in the lobby, so that's okay. He'll be along. Okay, we'll call the meeting to order. Today, pursuant to Standing Order 1082, we're studying the Canada Pension Plan Investment Board, which we do at least annually. And so with us from the Canada Pension Plan Investment Board is Mark Machin, President and CEO, and Mr. Leduc, Senior Managing Director. And I believe, Mark, you have an opening statement. I think I read it earlier. So go ahead. Floor is yours. Welcome and thank you. And I hope we didn't upset your schedule too much by moving you up a little earlier.
Not at all. Thank you, and good afternoon, Mr. Chair and members of the committee. Merci de m'offrir la chance de discuter.
Thank you for giving me this opportunity to discuss these matters with you today and answer your question. It is an honor to appear on behalf of the Canada Pension Plan Investment Board to discuss how we are helping ensure that the CPP remains sustainable for future generations of Canadians. This is an important topic for this committee.
Senior Managing Director and Global Head of Public Affairs and Communications for Canada Pension Plan Investment Board. And we welcome the opportunity to discuss CPPIB and how we are investing the funds that have been entrusted to us. We're strong believers in the value of transparency and open dialogue as one element of public accountability, especially through Parliament. I know your schedules are quite busy, so I'm not certain whether you've had a chance to read our submission and annual report, but regardless, I look forward to the committee's questions. I'll keep my opening remarks brief with that in mind. I'll start by sharing a few observations on the global investment climate and trends that are affecting how we operate. I'll then touch on our recent financial performance and some strategic considerations for the years ahead, including preparations to receive, invest, and manage additional CPP. Beginning with the investment climate, competition for investments continues to be strong. There's a glut of capital with, in essence, more money chasing fewer opportunities. There's signs of this across various asset classes: the lengthy bull market in stocks, growing demand for private assets, low yields on income-oriented investments, and high valuations on infrastructure are some examples. In this type of environment, CPPIB's advantages are even more important. These include our exceptionally long investment horizon, our size, the certainty or predictability of our assets, our people, our expert partners, our unique approach to managing our portfolio, and increasingly our corporate brand and reputation in the world's most hotly contested investment markets. It's equally important that we remain patient and disciplined. We must continue to be highly selective about what investments we will make. The businesses that we buy need to be able to preserve their value through cycles and achieve growth in the longer term. The businesses we are buying should also be able to withstand or benefit from disruption. This does not mean rushing to invest in the latest innovations. Rather, it means thoughtfully studying how disruptors might affect the assets we like today in the decades to come. For example, what will autonomous vehicles mean for toll roads that we own or for parking lots? And these are the types of questions we continue to examine. When we're considering trends like the heightened competition for assets and new disruptive forces, we look well beyond the immediate horizon. We're not trying to beat the market each and every year. We're looking to add value over decades. Our strategy aims to deliver steady, absolute, long-term returns over time through significant upswings and corrections. I continually remind our stakeholders that we fully expect that 1 year in 10, the fund will drop by at least 12.5%. This is planned for. We design our strategy and actions to deliver strong performance measured over multiple generations of contributors and beneficiaries. Amidst this backdrop, our return for fiscal 2018 was 11.6% after all of our expenses. This was driven by strong public equity markets through the first 9 months of the fiscal year. And when market volatility picked up during the fourth quarter of our year, the diversification of the portfolio provided resilience. Investment income was $36.7 billion after all of our costs. And when combined with net inflows from CPP contributions of $2.7 billion, this brought the CPP fund to $356.1 billion as of March the 31st. When I last appeared before you, about 18 months ago, the fund stood at about $300 billion. The 10-year return on the investment portfolio is 8%, and the 5-year return is 12.1%. After inflation, these figures were 6.2% and 10.4% respectively, well above the Office of the Chief Actuary's assumption of an average 3.9% return to keep the fund sustainable over the 75-year projection period in their report. Before concluding, I'll briefly touch on a few operational and strategic considerations for the years ahead. As you know, in January 2019, CPPIB will receive and invest its first cash flows from the CPP enhancement that the federal and provincial governments have collectively put in place. Our preparations to manage additional CPP contributions are well underway and firmly on track. Our teams are diligently working to receive these new funds. We will structure the fund going forward in a way that will respect the funding differences between the base and additional CPP, while also ensuring that we make full and efficient use of our existing platform and global investment capabilities. You will have gathered from my remarks that, given our investment horizon, we are continually looking ahead into the future. As we do this and assess the various trends that I've discussed, we know that we can't rest on our laurels. The asset management industry is changing, and we must continuously adapt. Our investing strategy will become more agile so we can seize opportunities and continue to be resilient as we face a number of forces whose precise outcomes remain uncertain, whether it's global growth trajectories, technological disruption, geopolitical forces, or climate change. To position our international competitiveness, we will invest responsibly in new technology and data capabilities. This will augment our investment talent and skills, and will focus on improving operational efficiencies and increasing collaboration and knowledge sharing across our diverse investment teams and corporate functions. Our culture will be even more innovative and ambitious while firmly rooted in our compelling public purpose. That concludes my formal remarks, and on behalf of my colleagues, we thank the Standing Committee on Finance again for inviting us here today, and I look forward to our discussion, and I'm pleased to answer any questions you may have. Thank you.
Thank you very much. We'll go to approximately 6-minute rounds. That way we can get everybody on with one round of questions, starting with Mr. McLeod.
Chair, and thank you for the presentation here today. I read your report with interest. I find it very interesting that some of the emerging threats included climate change. It's an issue that has generated a lot of concern in the Northwest Territories. I wanted to talk about accountability that you mentioned in your report. In your annual report, you outlined various measures through which the CPPIB is held accountable to the federal and provincial governments. And given the distinct nature of the territories, can you outline how the CPPIB currently engages with the governments and the contributors and the beneficiaries in the 3 territories? And is there an interest from the board to increase its accountability to the Northerners, either through a more formal process or informal process? That's my first question.
Great. Thank you very much for the question. Yes, we are accountable to Northern Canada through the federal government, and it's our understanding that the territorial ministers are present at all the finance ministers' meetings where discussions and decisions on the CPP take place. And in addition, we understand the territorial officials are members of the CPP Committee of Officials, which acts as the main forum for the exchange of information and policy ideas between the federal, provincial, and territorial officials.
Thank you, and maybe we can work on arranging a little more in terms of roundtable discussions and information sharing in the Northwest Territory specifically, and I'd be glad to help with that. I do have a question on another issue that you raised in your report, that the CPPIB values diversity at its highest levels, and that this year the board achieved gender parity. How does the CPP currently fare at addressing other forms of diversity, such as inclusion of people of color and or Indigenous Canadians in the board, in management positions? And is there a commitment to addressing these areas if there is shortfall?
Yeah, that's a terrific question. So as you pointed out, our board is 50% women, so male, female today. We have a policy that it should be no greater difference than 60-40. Our senior management team today is just over 30% women, and overall we're about 44% women. In terms of targets for other aspects of diversity, we're very focused on that at both the board level and at the management level. We have put in place targets. Now, we're a meritocracy. We have to be a meritocracy to compete internationally, but we do think there is a value in having some targets out in the future. So we aim, in particular, to increase the representation of visible minorities at the more senior levels of the organization. Today in Canada, visible minorities about 41% of our employees, but it's a lower percentage at the more senior level, and that we want to increase significantly. Same with the LGBT community. We also have a target to increase representation there, and also for the senior levels of women, we also have a target to increase that over time as well.
Do you have specific targets also for Indigenous Canadians? And if you do, what is the strategy to reach those targets? Is that something you can share with this committee?
Yeah, today we don't have a target for Indigenous Canadians. It's about 0.5% of the population is Indigenous Canadians, 0.5% of our employees, but it's something we will examine in the future.
What does the future mean?
Well,
at what point do you start to include Indigenous Canadians as part of your targets?
It's something that I think we should look at in the next, over the next year or so. So by the next time that I come here, I'd certainly have a crisper answer for you than telling you where we are today and where we aim to be.
Okay, I look forward to that information. Thank you.
Mr. Alves.
Yes, thank you, Mr. Chair, and thank you to both Mr. Mission and Mr. Leduc for your presentation today, as well as for the work you do for Canadians and making sure that they have a strong, secure pension. In light of those comments, obviously 15% of the current assets of the CPPIB is within Canada. And so many might say that there are obviously opportunities within Canada for whether it be infrastructure or other projects. The government came into office with a promise of a Canadian infrastructure bank that was more oriented towards making sure that small communities across the country could have lower interest rates on their borrowing. They have instead changed that and actually taken monies away from them, from those same municipalities in order to fund this Canadian infrastructure bank. Do you see the infrastructure bank as being a mature institution where you could put Canadians' money at this time?
Thank you for the question. On the Canadian Infrastructure Bank, I think from our perspective, one of the challenges I mentioned in my opening remarks is the huge amount of money chasing opportunities and the lack of supply of those opportunities. And that's particularly acute in the field of infrastructure around the world. So valuations on infrastructure around the world, in Canada and around the world, are at extremely high levels, and things are very finely priced. And we have struggled to find new investments in infrastructure. And one of the main reasons for that is the lack of a pipeline, a predictable pipeline of opportunities. And of size opportunities. We have to keep our cost structure at a minimum, and therefore we can't have massive teams that are just on standby for when an opportunity comes along. So our infrastructure team is less than 50 people to look at all opportunities in the world. One of the things that we are hopeful about is that if the infrastructure bank gets up and running effectively, then it will increase the pipeline of size opportunities that are available for investors like us, institutional investors. And if that happens, then we'd welcome looking at those through our risk return requirements.
The question was, though, is this a mature institution enough for you to do business with? I think that it would take at least 5 years before this Crown Corporation is actually up and running with policies to be able, and deals. And plus, much infrastructure is owned or usually managed provincially. So to have necessarily a pipeline, I think, may be a bit of a challenge. But the question was, do you feel this institution is mature enough for the investment board's attention?
Well, I'd say again that our job is to assess the pipeline of opportunities. So we are hopeful that there'll be a significant pipeline of opportunities that will come over time as the bank gets up and running, and so we're hopeful will happen over time.
Now, I did ask at the last time we had yourselves, as well as the Minister of Finance, about whether or not he would, again, stay at arm's length from trying to influence the CPPIB from making particular investments that would be politically advantageous. In regards to the Canadian Infrastructure Bank, has that been the case?
Yes, that's been the case. Yeah.
Okay. Speaking about pipelines, has there been any pressure at all whatsoever to invest in the Kinder Morgan Trans Mountain pipeline?
No, there's been no pressure.
Okay, thank you. So obviously, my riding has a lot of seniors, and of course they depend on the CPPIB to make sure that there are good returns. But now, with next year, the additional CPP opening up, many millennials have asked the question to me whether or not we're going to have a strong, stable CPP for them in the future. Could you just tell us a little bit about the reason for the separation of the CPP base and the additional CPP fund, and what measures you have to ensure millennials understand that when they put those monies away, that they'll be there when they need them?
Yeah, certainly. So on the additional CPP, we expect the first funds from the additional CPP to arrive in January next year. There's a huge amount of work that's gone internally to make sure we're totally ready for those funds to arrive. Given the nature of the funding of the additional CPP versus the base CPP, we will need to run those at a lower risk level than the base CPP funds. And we also need to, required by the Act, to report on them separately, to report on the funds separately. So we'll be ready to do that, and we'll be ready to invest that additional money responsibly within the risk parameters that are appropriate for that money, and to make sure that it is there for people who are contributing from January 1.
Okay, just and given that last time I had asked specifically in regards to the transition from a passively managed fund to an actively managed fund, you'd said that there have been great strides with that. How do Canadians know that? I believe the reference portfolio allows people to be able to understand the opportunity cost, or in this case, in some cases, gains. Could you just explain that so that the public can know how their monies are being invested?
Yes, certainly. So one of the ways that we test whether we are performing relative to what we could have done if we just stayed passively investing back in 2006 is, as you say, measuring our performance versus the reference portfolio, which is a simple portfolio of equities and bonds. And as of the fiscal year end, the outperformance was about $19.3 billion. So that's $19.3 billion of extra money in the fund that wouldn't have been there if we hadn't gone into an active management organization.
Okay, thank you both. Just one clarification, Mr. Meshin. You talked about size opportunities. What did you mean? Something over $500 million in terms of infrastructure? The question was on.
Yes. Yes, Mr. Chair, that'd be correct. We typically look for opportunities that are over about $500 million around the world. That's correct.
On infrastructure. Okay, thank you very much, Mr. Dussault.
Merci, Monsieur le Président.
Thank you, Mr. Chairman. And thank you, gentlemen, for being here with us today. My question is one of principles that guide your investments. I saw in one of the documents we were discussing that there was climate change, water management, human rights that are amongst the commitments that are key here. I was wondering whether this was one of your principles, that is, that these are investments that respect the tax systems and the fiscal systems of the countries in which you invest. Thank you for your question.
So the first part on the areas that we look at for our ESG areas. There are 4, and we're introducing a 5th area this year. So you're correct to cite climate, which we've been focused on, climate change, which we've been focused on for about 10 years, water conservation, human rights, and executive compensation. And this year we're also introducing board effectiveness. I think the second part of your question was related to tax and how we comply with tax around the world, and we certainly comply with all of the tax requirements in the jurisdictions that we invest in, so we are focused on doing that. Obviously, in Canada, we are a tax-exempt status, and that applies in several other countries around the world where there are tax exemption agreements in place. Or the country applies a specific exemption on organizations like us, like CPPIB, and that they're often available to public pensions in countries around the world, and it protects the pensioners from double taxation. But it's our fiduciary duty to the beneficiaries and contributors to build a diversified portfolio with minimal transaction costs, including taxes on investment returns. But for sound public policy purposes, the investment income earned on behalf of beneficiaries by pension funds such as CPPIB is exempt from Canadian tax to ensure CPP beneficiaries are not double taxed, which is what would happen if the investment income was taxed when it was earned and then again as income in the hands of the beneficiaries.
Je comprends. Ma question, c'est pas tant.
Well, my question is not exactly about that. When you declare that 8 or 10% return on investment in Canada, but I'm wondering about your practices in companies in which you have significant investments. I was wondering if that's one of your criteria in your evaluation grid when you're considering an investment, whether fiscal responsibility is considered, because it's all very nice to say, yes, all the companies in which we've had interests conform with all tax laws, but there are companies that are more responsible fiscally than others. Some are not. So if I'm asking you this, it's because you were named in the Paradise Papers, or your investments were. With Highway 407, you have 4% of that highway with investments that go through Bermuda, the high-speed train in London. Your investments go through Jersey, and an electricity company in Chile, one of the biggest electric companies in that country. Your investment goes through Bermuda once again. So in the eyes of Canadians, those are the kinds of investments that may not be responsible because it aggravates tax avoidance and tax haven use. So it was in that sense that I was asking you about this.
No, thank you. So I think I'd say we have a fiduciary duty to our beneficiaries and contributors to build a portfolio with minimal transaction costs, including taxes on investment returns. And we honor our tax obligations around the world, and we pay taxes due in the countries where we invest and operate. We don't employ artificial structures which don't have a commercial basis to avoid tax. And the companies we invest in pay corporate income tax on the profits they earn. And in jurisdictions where tax agreements don't exist, we do look at using investment structures that limit the tax cost to CPPIB and thereby limiting the double taxation on CPPIB beneficiaries.
Vous avez aucune gêne en tant que...
You have no problem as a protector of Canadian pensions to using tax structures that use jurisdictions with very low or no taxation. That doesn't bother you at all, using Canadian money to circumvent Canadian tax rules. You say we respect all the rules, but you're reducing the tax on all your investments by using these jurisdictions with very low taxes or no taxes. How can you justify that to Canadians when they do have an interest in your activities? Mr. Dussault, if I could intervene here.
Indicated, and we'd be more than happy through the Office of the Clerk and the Office of the Chair to share more specificity around those investments. One thing to consider is as we compete around the world for these assets, and to answer your question specifically around representing Canadians, and in many of those instances, and we'll get those specifics, when we invested in those transactions, a lot of the structures are already in place. And so for CPPIB to unwind them could lead to a much higher cost of capital for the organization, and therefore we would be hampering and injuring the best interests of the CPP fund. So in a lot of the instances when we're investing and when we're competing against a lot of other institutional investors, we want to make sure that we have the same equal cost of capital as other institutional investors. Otherwise, as we look to deploy capital internationally, we would be, doing so with part of our hands behind our back. And I think most Canadians would expect us to structure things absolutely in a way that we would not be embarrassed and follow, at a minimum, follow all of the laws and rules.
Okay, thank you all. Ms. O'Connell.
Thank you, Mr. Chair. Thank you both for being here again. I want to touch more on the sustainable finance. And obviously, Canada recently announced the moving forward with the expert panel on sustainable finance. As well, I noticed Ontario move forward in terms of the signing onto disclosures of investments. So I'm curious in terms of the CPP and CPPIB specifically, what you're doing in that regard. I was part of Chatham House's Wodeston Club, and it really focused on sustainable finance. And Europe is light years ahead of us on this, and their investment boards are moving ahead significantly to ensure that investors, and in this case, Canadians, know that their funds are being invested in sustainable finance and that it's being disclosed in that fashion. So can you maybe elaborate as to what specifically you're doing to move ahead on this?
Yep, certainly, it's a terrific question. I'll address some aspects, and Mr. Leduc may want to add. So, with respect to what we call sustainable investing, I referenced we have 4 and now 5 areas that we're particularly focused on, and climate change has been one we've been focused on for the last 10 years. We most recently, our head of sustainable investment was a member of the FSB's committee on disclosure of climate-related risks, and that work was completed last summer and announced at the G20 last summer by Governor Carney. We have committed to implementing that ourselves by fiscal 2021. One of the reasons for that is we need sufficient disclosure from all of our portfolio companies to build up, so we understand what we have and the risks that we have. So we need more and more of those companies to adopt those disclosure mechanisms. In the meantime, we're very focused on continuing to implement stronger understanding of the risks that we're taking on in climate change. both from the bottoms up. So we're developing a toolkit that, and we go into a lot of detail on this in the annual report. But there's a toolkit that we're developing for each investment team to understand, so they can address and understand the risk they're taking on and the investments they're making. We're also doing a top-down assessment of all the risks that we're taking on. We have a carbon footprinting tool that we're developing, because there's no perfect tool in the world to do that today, but we're working with best practice around the world to develop our own proprietary tool. We're developing our own model for the energy transition and the speed of that transition, which is critical to understanding the risks we're taking on. And beyond all of that, I mean, I'd highlight we now have a dedicated team investing in renewable energy. We have made a number of renewable investments here in Canada, in Europe, in India and Brazil in the last year. We continue to commit to growing that. We've mentioned a $3 billion number for where we expect that portfolio to grow to. And today we announced a green bond that we're issuing. I think we're the first pension fund in the world to issue a green bond, which we'll use to partially finance those investments.
Thank you. I think China is doing a green bond, or they're looking at it, but you're probably right. You're the first investment fund. And just before, Mr. Leduc, before you jump in, do you have targets of investment? I realize the investments you currently have and the disclosures and the climate risks will take some time to gather that info, but moving forward on anything new that you invest in, do you have a target in terms of percentages of how much risk can be associated in any new portfolio based on climate?
I say, first of all, we're believers in climate change. We think climate change is happening. Secondly, it's a very complicated risk which affects many aspects, and that's one of the challenges, is understanding all the risks. So whether it's the physical and geographical changes, or it's regulatory changes, or it's consumer behavior changes. So there's a whole variety of changes that we have to assess for every investment we take on. So we look every investment we make, we look at it through that lens to understand all the risks, and to our investment mandate is to maximize returns without undue risk of loss. So everything that we look at it through that lens of risk and return. So we have to make sure we're being sufficiently compensated for all of those risks that we're taking on, and we have an adequate return on the investments.
I don't know,
Mr. Leduc?
I think Mr. Machen's been comprehensive, so I wasn't planning on adding anything.
Okay, thank you.
Okay, thank you, Mr. Polyev.
Thank you, Mr. Manchin, for your service to the country. Based on my reading of your bio, there's no one be more qualified to shoulder this enormous task. And thank you for being here today. My first question relates to the Trans Mountain Pipeline. Have you ever discussed this pipeline with the finance minister or any member of the government?
No, I have not. So I've not discussed it. What I can say is that the Greenhill, which is the financial advisor to the federal government, has approached us, but we have not taken on any confidential information. I believe they've approached a lot of funds domestically and internationally. I believe that, but we have not taken on any confidential information, and we've not got into any detailed discussion.
Pardon me, I had my earpiece out. Who did you say had approached you?
Greenhill.
Okay.
The investment bank.
And is your fund doing any analysis on the value of the assets that are for sale?
Well, at this stage, we haven't done any analysis. We're still evaluating the situation. Obviously, we have an obligation to investigate and to assess any major investment opportunity that comes along, and to fully understand all of the risks, fully understand the potential returns, and also to understand the fit for our portfolio as well. So we'll decide whether to evaluate it further.
But neither you nor any member of your management or board have discussed the Trans Mountain Pipeline with any member of the government?
No.
Okay. obviously you're going to receive more contributions based on the schedule of increased payroll taxes that the government has set on track. The Fraser Institute reports that 83% of your holdings are outside of Canada, and we understand you need to diversify internationally, given your mandate is to maximize returns without undue risk of loss. However, an increase in CPP contributions will necessarily reduce private savings, and private savings are typically affected by home bias. That is, that people tend to, when they're investing their own money, they tend to invest it in their own country. What do you think about the suggestion that by diverting Canadians away from their own private savings into CPP, that more of those savings will translate into foreign investment outside of Canada rather than investment here at home?
Thank you. It's an interesting question. I think from our point of view, our mandate is very clear, and it is to invest the funds that are not immediately needed and to make sure that we are maximizing returns without undue risk of loss. As you said, diversification is a really key element of that, both from a return but particularly from a risk point of view, and making sure that we don't have all our eggs in one basket.
Right.
And one of the
and I'm not criticizing you for that at all. I think you are carrying out your mandate properly, but I'm asking whether or not the decision by the government to increase CPP contributions could have the effect of diverting savings that would otherwise have been invested by Canadians in Canada to say investments, 83% of which will go abroad. Do you have any? Do you have any response to that?
I think that's a terrific question. We don't have in our possession any studies that would demonstrate that, if I could use the word, long-term savings, whether increasing into the CPP will cannibalize private savings. Our own view, and we're very interested in financial literacy in Canada, and what we see is what Canada has as one of its biggest strengths is these three pillars to combat what is arguably one of the biggest financial challenges that any Canadian faces, which is retirement, lifelong retirement security. Our view is that all three pillars have to function and fire on all cylinders. So whether it's the saving at home, saving through CPP, or saving at work.
Thank you very much for that. I see on page 16 of the report you provided the following quote: because of the pressures and different objectives of prevalent short-term investing, we believe that individual security prices and current valuations often do not represent their long-term intrinsic value. And you're not alone in making this observation. It does seem like the text written here would have been written by someone who is a value investor. I mean, often when Canadians go to hire an investment advisor, they want to know the investment philosophy. Would you describe yourself, Mr. Matchin, as a Benjamin Graham style value investor, or what investment philosophy do you bring to this role?
I think as an institution, we do tend to be value investors. So we're looking for companies and opportunities and assets that are lower than their long-term intrinsic value. So we try and take advantage of dislocations in markets or situations where things are not fully valued, and invest in them so that we can make money for the fund over the long term. So we absolutely look out for those opportunities, and a number of our strategies are more sort of value focused. Yes.
So you're a bargain hunter.
We'd certainly love to find bargains. There's not many in the world these days, but we certainly are looking for them.
And we'll have to leave it there before we find out how valuable this bargain is that Poilievre's onto. Mr. Fergus.
Beaucoup, Monsieur le Président, puis merci, Monsieur.
Thank you, Mr. Chairman. Thank you, Mr. Matchin, Mr. Leduc. Once again, on behalf of all Canadians, we do appreciate your efforts to secure our pension system through your investments. As I look at the annual report from 2018, you mentioned that the geographical distribution of the pension fund on March 31st was about 38% US, almost 20% in Europe, and 15% in Canada, and then Asia and others. So I'd like to know, does this geographic distribution seem optimal to you? And have you anticipated changing it in the short term? And if so, why?
We gradually will evolve the portfolio over time, and I'd say with respect to the U.S., it's likely because it's the biggest economy in the world and the biggest capital market in the world, and one of the most developed investment markets in the world. It's likely to continue to be a large portion of our investment. I'd say gradually over time, we'll increase our emerging market exposure over time. So that's approximately 15% of the portfolio today. We publish on page 31 of the annual report the strategic portfolio, which represents where we'll be, we anticipate heading towards by 2022. And there we increase the emerging market weight towards 22%. And we'd anticipate it to increase after that towards a third of the fund. So by 2025, we anticipate emerging markets will be 47% of global GDP. And by 2026, China could overtake the US as the largest economy in the world. So we anticipate more of the money being more responsible, to be more diversified into emerging markets over time.
Super, merci beaucoup.
Thank you very much. Following that question, you did, in answer to Mr. Dussault's question, or rather Mr. Albus's question, you did touch on this. I'd like some elaboration. This difference between the CPP, the basic fund, and the supplementary one, the new one. I'd like some clarification about that. How are these two strategies different?
A lot of detail on pages 21 and 22 of the annual report. As soon as you have the annual report there, but probably too much detail to go into today, but essentially the additional CPP is more of a fully funded pool of capital versus the base CPP, which grows into its liabilities over the long term as a sustainable fund, but is not fully funded, and that means that the fully funded the additional CPP, the investment returns, the correlation between the investment returns and the funds available for paying the benefits is much more tightly correlated. So therefore, we should run a lower risk for that piece of the portfolio. So we're going to run a lower risk piece for the additional CPP, and we'll continue with the base CPP at the current risk levels. So.
À un moment donné, ça va changer, j'imagine, ou ça va...
One point it'll change, I imagine. There'll be an adjustment after how many years? How long will it take before the situation of the additional CPP balances out and the conditions become more or less the same in terms of our obligations to our clientele?
Over the long term, over many decades, gradually as the base CPP, which again is fully sustainable but is not fully funded, that gradually will converge over time as it becomes more funded over many decades ahead, and the risk that will be running the two streams at the additional and the base CPP will converge many decades in the future, but they will converge towards each other in the future. Yes.
Bon. Mr. Président, est-ce que j'ai une chance? Okay.
Mr. Chairman, do I have more time? Thank you. You also mentioned that one of your plans is to invest responsibly in new technological capacity and data analysis in order to be more competitive at the international level. Could you explain how you'd be more competitive with these kinds of investments? And over the long term, what proportion will these investments represent of your total investments?
Referred to in those remarks was some of the internal investment we'll be making to lift our capabilities. We along with every asset manager in the world, understand that we have a lot of data, and data is valuable. And if we can use that data effectively, then we should be able to enhance our capabilities as an investor, whether it's simply being more efficient operationally, or whether it's sharing ideas more efficiently across the different investment teams, or whether it's using data to provide better insights for the investment teams. So I think it's something that we and all of our peers around the world are moving towards, and we expect to make sure we're doing that and investing in that in a responsible and prudent way, but making sure that we're keeping up with and maintaining our competitiveness as other investors around the world invest in all of those areas.
Thank you both. Mr. Kamish.
I noticed online that CPPIB has shares in Kinder Morgan that predated the government's announcement. Can you tell us more about that deal? The purchase was $50 million worth of shares. And I'd like also to know, are pipelines a good investment?
Yeah, so I will double check and we'll come back to the clerk with the information, but I'm guessing at $50 million, that's in our sort of passive or balancing portfolio. Is what those shares would be. So it would be part of an index that we are investing in as part of the balancing part of the portfolio. I don't think it's an active investment. With respect to pipelines, we are invested in pipelines here in Canada and elsewhere in the world. And we have had positive experience and we've had negative experience, and it really depends on the risks, the regulatory risks, and
can you talk more about those the negative experiences? What were those?
Sure. I mean, one of the we invested several years ago in a pipeline from Norway into Europe called Gasled. We invested alongside a number of our peers, and soon after we made the investment, we were surprised by a very significant change in the tariff regime for that pipeline by the Norwegian government, and it's something that we've been in legal proceedings with for a number of years now. But it was quite a surprise to us at the time.
So that was part of the regulatory risk of investing in it?
That is part of the regulatory risk. It's a really critical part of due diligence to understand regulatory risk for any infrastructure investment. Infrastructure investments are by nature long-term and are very sensitive to those types of risks.
And you said that you were, in that case, you're still litigating with the governments?
I believe that's, yeah, I believe that's the case, yeah.
Okay. So compare that to Canada. How do you find the regulatory risk here?
It's very difficult to generalize. I say we have pipeline investments here. We're very comfortable with the pipeline investments that we have here today. So it'd have to be very specific about the particular situation. We have, as I said earlier, we haven't looked at that yet. We have been approached by the federal government's advisor, but we haven't taken on any confidential information, and we haven't got.
Is that because of the regulatory risk?
No, it's just purely because it's at an early stage, and we haven't got any confidential information or any information to assess the situation yet.
Is it something you would consider investing into then?
I say we haven't decided yet. We're still evaluating the situation. We obviously have an obligation to assess every major investment opportunity that comes along and fully understand the risks, fully understand the potential returns, and understand how it might fit into our portfolio.
So what are the kind of risks that would make investing in the pipeline unacceptable to the CPPIB? what is too much risk when it comes to a type of asset like a pipeline?
Well, I say with any investment, you're measuring the risks versus the potential returns, and that's the equation we look at on any investment. So that's the equation that we need to thoroughly understand both sides of that on every single investment that we make. So.
Well, CPPIB has invested in Wolf, which earlier this year secured the Access pipeline, entire ownership. You're also invested in Star Capital Partners that acquired the total FINA ELF TPL Connect pipeline between the United Kingdom and Scotland. So in those cases, I mean, that has to be part of the portfolio you've assessed. So is it just diversifying, making sure you're diversified across the board in that particular sector? Or is it looking at things like how much risk have I taken on? Is there too much regulatory government-imposed risk, political risk?
Certainly, the risks that you mentioned are, two or three of the many risks that we need to look at when we make any investment. And I say with infrastructure, pipelines and infrastructure are very long-term investments. So thoroughly understanding, every single one of the risks we're taking on and making sure we're sufficiently compensated for it, and making sufficient returns is a critical part of the assessment. And as you say, we do have pipeline investments around the world, those you mentioned, and others in other places.
Okay, I'm done.
Mr. Sabera.
Thank you, Mr. Chair, and good afternoon, gentlemen. Just elaborating a little bit more. It's great to see my colleagues on the other side asking about pipelines, and we're going to build that Trans Mountain pipeline from Alberta to BC. And make sure that we diversify our export markets for Canadian resources. I think that $12 to $15 billion that we're not getting for those Canadian resources needs to be captured. That'll pay for more schools, more hospitals, more services for Canadians, and we'll get to narrow that discount between WTI and WSC, which will be great, and I think something. So I take it once there is a data room set up for the Kinder Morgan pipeline, whenever that may happen, that most likely there'll be a number of institutional buyers that I can conjecture would be ready to take a look at such a great asset and it's something of significant value. Am I off on that, or am I kind of on the right track?
Well, I think we, and I'm sure many of our peers, again, will have an obligation to assess size investment opportunities in infrastructure. I mentioned before that the pipeline with a small p, if you will, of opportunities around the world is a real challenge for people. The same here in Canada and most countries in the world. So when a size opportunity comes along, we have a responsibility to evaluate it, understand the risk return, and also the fit in our portfolio.
Absolutely, and I think one of the attractions and one of the difficulties for CPPIB is size. The idea, in the size of investment, your folks' investment fund requires liquidity, requires a sizable investment. Making a $100 million investment for some funds is just not a lot, but something like a $4.5–5 billion investment is attractive to not only yourselves but to the other Canadian investment funds, be it Teachers or OMERS or HOOP or whoever you may mention, or BCIMC and so forth. So the size thing will be attractive, I think, to a lot of funds.
Well, certainly, I'd say again that in infrastructure, we do look at investments typically over $500 million around the world. So and because we have only a limited capacity to evaluate opportunities here in Canada and elsewhere in the world, so size opportunities are welcome.
Absolutely, especially in particular with your opening remarks when you talk about the glut of capital and what that means in the world and how capital is chasing what we call real assets in the investment world, not existing brownfield opportunities, because they need to be in a different vein, but brownfield assets, not greenfield assets. And I think on that front, for us, looking at the pipeline which would diversify our export markets of Canadian oil away and to markets where demand for oil, frankly, is still increasing. Asia's demand for oil isn't going to be increasing today. It's going to be increasing tomorrow and for the foreseeable future. And it'll be great to have those markets served with Canadian resources. On that front, I just wanted to pivot and ask, how competitive is it? Because if capital there's lots of capital out there, that means yields are low, prices are being bid up. How is CPPIB finding that area?
I think your question refers just generally to the investment climate around the world. I think it is a challenge around the world. Now, markets, volatility did increase, say, in the fourth quarter of our fiscal year, and so valuations have come off a little bit in certain areas around the world. But it's still a challenge given the wall of money. For example, in private equity, about $1.7 trillion is chasing private equity opportunities around the world, which is by far the largest pool of uninvested capital we've ever seen. And it's a similar story in infrastructure and real estate and across most markets. So it's a challenge for us. We need to be patient. We need to be selective. And we need to find the right opportunities.
CPIB's long-short strategy and the other investment measures that you've taken, as someone that worked on the street and follows the investment industry quite closely, I applaud your returns. I applaud your sustainability. Sustainability is difficult. The typewriter was sustainable for a period of time, but we don't use the typewriter anymore. And even on the renewable energy front, there are a lot of renewable energy companies which potentially were first movers who are no longer in existence. So in terms of your returns, I applaud the team down there and the strides that you've made and so forth. On the enhanced CPP that we put in place that'll benefit literally millions of Canadians starting in 2019, literally, will it be difficult to place those funds for investment purposes?
Thank you for the question. On the additional CPP, it gradually builds up over a number of years. So in the first year, I think the Office of the Chief Actuary anticipates about $1.5 billion of additional money in that first year, and gradually increasing after that. So we don't think it's going to be a challenge to diversify appropriately and invest that money prudently and carefully. So I think while today, as I said, on the specific private assets markets are fully priced in many cases, I think over time we'll be able to find sufficient value and appropriate destinations for that capital.
Okay. Thank you, Chair.
We have a quick question from Mr. Dussault and a quick question from Mr. Polyev, and we'll close. I did have one question, and that just relates to the Canada Pension Plan Investment Board Act. Is there any changes that you see are needed in that act to make it more effective, or are we okay with where we're at?
The act has stood the test of time. It's a really strong, sound piece of legislation. It was recently amended to ensure the differences between base and additional CPP. We continue to evolve our approach within the framework that's provided, particularly on our disclosure. Disclosure doesn't stand still, so we continue to work hard to exceed those requirements. But the framework itself is solid and sound.
Okay, thank you. Mr. Dussault.
Very quickly, one of the government factors I mentioned earlier that you also touched on, salaries of executives. What kind of evaluation do you do to assess the policies for management remuneration in companies in which you have an interest? There's a lot of talk about that, the ratio between the highest salaries and employee salaries. 1 to 30 is assumed to be reasonable for the highest paid executive in a company. Is that the kind of criteria you use? And if not, what sort?
Thank you for the question. So I said executive compensation is an area of focus for us for our sustainable investments, and we think there need to be clear and appropriate links between executive pay and company performance, so that it contributes to an alignment of interests between management and long-term investors. And we think when interests are aligned, then long-term shareholder value is more likely to be created. So we look for a clear link between executive pay and company performance. We look for appropriately structured executive compensation programs that emphasize long-term and sustainable growth of shareholder value. And we look for full disclosure in corporate reporting of compensation information and a clear rationale for the compensation decisions. So that are some of the areas that we are focused on and engage on with the companies we invest in.
Pauline, you have the last question.
Yes, you said that you were the CPP was approached by the government selling agent for the Trans Mountain pipeline on a project. What date was CPPIB approached?
I will have to get back to you by the clerk on the exact date. It was very recent.
Like in the last 10 days?
Yes.
In the last 10 days, okay.
Yep.
Okay. Is that adequate, or do you want the exact date?
I think Mr. Machin indicated that he could get back to the committee with the exact date. That
Okay,
would be
there's I think a couple of points that you can get back to the committee on, send to the clerk, and that'll be fine. With that, I know we had a pretty quick hearing this time round, but I think it was very productive. So thank you for the annual report as well. A lot of information in there, and thank you for the good job that you do. I think when you're getting 12% return average, a little better than that over the last 5 years, that's pretty impressive. So thank you. Meeting adjourned.